What is budgeting? Well, budgeting is simply the allocation of resources to planned or intended activities. In a business, this regards future business operations. So basically, you have 2 points there. One, your anticipated activities, and two, the resources required to fund those to allow them to be carried out efficiently and effectively. Okay, so this is the budgeting process. Now, what are some types or approaches to budgeting? Well, to start with, there's the incremental budget. And this is generally where you take all of the activities that existed from previous time periods and all of the costs of those activities from previous time periods, and then you reuse those. You continue on. Oftentimes you will increase an amount incrementally based upon either inflation or a rise in collective costs or just a random or routinized increase over a given standard period of time. Okay, so this is an incremental increase, but you're using past or historical budget information or data. The next one is an activity-based budget. Okay, now this is more of a tops-down approach. Basically, you start with the activity, and then from those activities, you build the budget down. And it's generally done, as we indicated, by higher level management and then pushed downward in the organization to the individuals who were supposed to make it happen based upon the budget that they have for operations. Okay, so it's that type of planning where you basically start over from scratch based upon the activities that you identify as being necessary. All right. I will say that this oftentimes is not the best approach because particularly when higher level managers don't have a good understanding of all the activity requirements for a particular operational process, they tend not to be effective in setting aside adequate budget items to cover those activities. Okay, then there's value proposition budgeting, and this is basically where you look at the value proposition of every activity that you're going to fund, and that helps you make determinations about whether it's necessary, whether there is an adequate value proposition received from the investment in there. So it's kind of like a return on investment type analysis for each activity in the budget. And then there's the zero-based budgeting, where basically you start from nothing and you have to argue to include an activity and then have to argue to justify whatever expense or resources are necessary to fund that budget. So these are the approaches to budgeting, or at least to setting a budget. Now, what is the level of involvement and who is involved in the budgeting process? Well, generally it comes in three forms. You either have an imposed budget, which is set up on high and then pushed down to those below the top managers who are actually going to execute the operations that are relevant to the budget. A negotiated budget is when there is some back and forth between those who will carry out the operations and those setting the budget. And then participative is where there is a collective or group participation, both by the individuals who are carrying it on and the people at the top, to basically work together to set a budget. Okay, participative budgets tend to be the most advantageous, but they're also not frequently used because it's more difficult to do when you have more people, more cooks in the kitchen, as they say, adding their input to what should be in the budget and how it should be set. So this is budgeting, the basics of it, what types they are, and the level of involvement of those who are affected by the budget.